An interesting start to the week as Greece votes no on whether to accept the proposals put to the country by its creditors, the ECB, the EU and the IMF. So what's the next step? I'm joined by Dimitris Kantzelis, Chief Market Strategist with XMarkets, to look at the week ahead. Dimitris, as Greek voters reject bailout offers, attention now turns to the ECB. Today, the central bank's policymakers plan to meet to determine their next step, though they may wait to see what Eurozone heads of state decide at an emergency summit meeting on Tuesday. What should we be seeing from these talks and from Greece this week?
Look, firstly, let's start from the ECB side, because this is for today. I cannot see any reason for the ECB to raise the ELA without having a political give-off somehow. So I don't see that we will have any political deal or anything today. So I don't think that the ECB can move and change anything today. So I'm expecting ECB to retain the same amount of the ELA for Greece, but not increasing or decreasing. That's from the ECB side, and the ECB will be waiting for the leaders' summit. I'm having some news from Greece that the Greek side and PM Tsipras is trying to compromise. We saw that the finance minister Varoufakis has already resigned. That's for us, that's happened in order to be able to reach an agreement, to be able to push on this side. As a political class, the decision of the Greek people gave a very, very big majority, and I do think that apart from all the bad news for the Brexit, I still believe that we could reach a compromise this week. Will be difficult for the Greeks and Europe, but I still believe that they want to keep Greece within the Eurozone. I would be looking for the peripheral spreads of Italy and Spain already boosting versus the France and Germany 5-year swaps. So this will be the base case scenario for us this week. The markets already opened, pushing euro lower, but seeing some intervention from big players. We still expect the S&P today to show us if they already intervene in the markets. But it will be a very, very crucial week for the Eurozone and the euro itself, because I really believe they are going to focus on how they could reach an agreement. The next big date is the 20th of July, when we have some big redemptions of ECB bonds there. 3.5 billion.
Both the US and UK will release data concerning their respective interest rates later this week. With the Federal Reserve, most officials say they expect to move in the second half of the year, while the Bank of England is expected to leave the benchmark rate steady at 0.5%. Do you expect a major move here, or more a clarification of their hesitation?
So for us, this is the base case scenario. So this will not change. As you mentioned, US still in the game of pushing rates higher later this year. It's already data dependent. We've said that, but it will be the same. We see some positive data coming out from US. So I cannot see how the main case scenario, which is September rate hike, could change right now. As for the UK, I'm still bullish, and I think we might see rate rise later this year, because we're getting some really good news from wage growth. I'm really watching closely how the wage growth is moving versus the inflation, and this is what Mark Arne is watching as well. So I would really believe that UK will move. Remember that this was what we were watching last year, last summer. US was going to raise the rates, UK was going to raise the rates, but then a slowdown came. So I really believe that the US and UK are really, really close to start raising the rates. Of course, the ECB is not in the same place. So I would really believe that the dollar and the pound will dominate the market in the next few months.
Are there any events this week you think will have an impact on the markets?
Yeah, of course. We saw this Chinese increase the QE. We saw the Chinese stocks that were pushing lower, and we generally see a global market which is willing to see more QE coming out from the central banks. The question is when the real economy will support the growth, when the central banks will stop intervening. And this is how we can blend it with what we said earlier on. Now we see US and UK really close to the coming out of this huge crisis coming out of 2008, and this will be the dominant and the driver in the market. I will be watching closely what's happening in Asia, but I think that both in China and Japan, the QE is going to continue.
A lot to look out for this week, so make sure you keep up to date by clicking back to Dukascopy TV. Bye for now.